Question 1. Overview of liability insurance. What is the primary purpose of commercial general liability (CGL) insurance? A. To provide coverage for damage to the insured's own property. B. To protect against claims of bodily injury or property damage to third parties. C. To cover the costs associated with employee injuries in the workplace. D. To insure against losses due to natural disasters affecting the business. Answer. B. To protect against claims of bodily injury or property damage to third parties. Explanation. Commercial general liability (CGL) insurance is designed primarily to protect businesses from claims arising due to bodily injury or property damage caused to third parties during business operations. This includes coverage as bodily injury and property damage, which pays for damages if the insured is found legally responsible for harming someone or damaging their property. Options and C do not apply because they pertain to property coverage and workers' compensation, respectively. Option D is incorrect as natural disaster coverage typically falls under property insurance, not CGL. Question 2. Workers' compensation insurance. Which of the following statements is true regarding the benefits provided by workers' compensation insurance in Hawaii? A. Workers' compensation only covers medical expenses for injuries that occur at the workplace. B. It provides coverage for lost wages, medical expenses, rehabilitation, and death benefits resulting from work-related injuries. C. The employer is not required to have workers' compensation insurance if they have fewer than 5 employees. D. Workers' compensation benefits are taxable income for the injured employee. Answer. B. It provides coverage for lost wages, medical expenses, rehabilitation, and death benefits resulting from work-related injuries. Explanation. In Hawaii, workers' compensation insurance provides comprehensive benefits that cover medical expenses, lost wages due to disability, rehabilitation services, and death benefits for employees who suffer work-related injuries or illnesses. Option is incorrect because workers' compensation covers more than just medical expenses. Option C is false. All employers in Hawaii are required to carry workers' compensation insurance, regardless of the number of employees. Option D is also incorrect. Workers' compensation benefits are generally not taxable as income. Question 3. Scenario-based question on risk management. Mr. Johnson owns a small construction business in Hawaii. Recently, he learned about a new safety program designed to reduce workplace accidents and save on insurance premiums. He is considering implementing this program but is unsure of the potential benefits. What should Mr. Johnson prioritize in assessing the implementation of the safety program? A. The immediate cost of training and materials versus the potential savings on insurance premiums. B. The number of employees who will resist the changes to their current safety practices. C. The legal implications of non-compliance with OSHA regulations if the program is not implemented. D. The long-term benefits of reduced risk exposure and improved employee morale due to a safer work environment. Answer. D. The long-term benefits of reduced risk exposure and improved employee morale due to a safer work environment. Explanation. When assessing the implementation of a new safety program, Mr. Johnson should prioritize the long-term benefits associated with risk management. This includes reducing risk exposure, which can lead to fewer accidents, lower insurance premiums over time, and improved employee morale due to a safer workplace, while immediate costs option A and employee resistance option B are valid concerns. They should not overshadow the importance of enhancing safety and compliance with regulations like OSHA, which directly impacts business sustainability and worker well-being. Option C, while important, does not address the proactive nature of implementing a safety program for risk reduction. Question 4. Insurance contracts. Which of the following elements is essential for the validity of an insurance contract? A. The contract must be in written form to be enforceable. B. All parties must have a mutual understanding of the terms and conditions. C. Consideration must be present, meaning something of value must be exchanged. D. The insured must be aware of all possible risks covered under the policy. Answer. C. Consideration must be present, meaning something of value must be exchanged. Explanation. For an insurance contract to be valid, several essential elements must be present, including offer and acceptance, mutual assent, legal purpose, competent parties, and consideration. Consideration refers to something of value exchanged between the parties, typically the premium paid by the insured in exchange for coverage provided by the insurer. While it's important for the contract to be in writing, option A, and for both parties to understand the terms, option B, these are not legal necessities for validity. Option D is not required for the contract's enforceability. It is the responsibility of the insurer to provide clarity on covered risks. Question 5. Overview of casualty insurance. Which of the following best defines the concept of risk transfer in the context of casualty insurance? A. Transferring the risk of financial loss to another party through the purchase of an insurance policy. B. Avoiding the risk entirely by choosing not to engage in certain activities. C. Reducing the likelihood of a risk occurring by implementing safety measures. D. Accepting the risk and absorbing any potential losses that may occur. Answer A. Transferring the risk of financial loss to another party through the purchase of an insurance policy. Explanation. Risk transfer is a fundamental principle in insurance where the financial burden of potential losses is shifted from the insured individual or business to the insurer by purchasing an insurance policy. This allows the insured to manage financial uncertainties associated with various risks, such as liability claims or property damage. Option B describes risk avoidance and option C refers to risk reduction, which are different risk management strategies. Option D is indicative of risk retention, where an individual or organization chooses to accept the consequences of certain risks. Question 6. Theories of liability. Under the theory of negligence, which of the following must a plaintiff prove to establish liability? A. That the defendant had a legal duty to act in a certain way and breached that duty. B. That the defendant intentionally caused the harm. C. That the harm caused was a result of the plaintiff's own actions. D. That the defendant was aware of the potential risks but failed to disclose them. Answer A. That the defendant had a legal duty to act in a certain way and breached that duty. Explanation. In a negligence claim, the plaintiff must prove several elements: that the defendant owed a duty of care to the plaintiff, that the defendant breached this duty through actions or inactions, that the breach directly caused harm to the plaintiff, and that the plaintiff suffered damages as a result. Option B is incorrect as it describes intentional torts, not negligence. Option C misrepresents the plaintiff's burden, and option D is more aligned with fraudulent misrepresentation rather than negligence. Question 7. Claims handling and adjustments. In the context of claims handling, what is the primary role of an insurance adjuster? A. To deny all claims in order to protect the insurer's financial interests. B. To investigate claims, evaluate damages, and recommend settlements to the insurer. C. To represent the interests of the claimant during the settlement process. D. To manage the legal defense of the insured in the event of a lawsuit. Answer B. To investigate claims, evaluate damages, and recommend settlements to the insurer. Explanation. The primary role of an insurance adjuster is to investigate claims made by policyholders, assess the extent of damages, and determine the validity of the claims. Adjusters gather information including statements, documentation, and evidence to evaluate whether the claim is covered under the policy terms and to propose an appropriate settlement amount to the insurer. Option is misleading as adjusters are required to act fairly and impartially. Option C misrepresents the adjuster's role as they are employed by the insurer, not the claimant. Option D describes the role of legal counsel, not an adjuster. Question 8. Ethics in insurance. What is a key ethical obligation for insurance agents and adjusters when dealing with clients? A. To maximize the profits of the insurance company at all costs. B. To provide clear and accurate information about policy terms and coverage limits. C. To prioritize their commission over the needs of the client. D. To engage in competitive practices to undermine other insurance providers. Answer B. To provide clear and accurate information about policy terms and coverage limits. Explanation. Insurance agents and adjusters have an ethical obligation to ensure that clients understand the terms, conditions, and limitations of their insurance policies. This transparency helps clients make informed decisions regarding their coverage options and prevents misunderstandings. Option is incorrect as agents should not prioritize profits over client interests. Option C is unethical and against the principles of responsible conduct in insurance. Option D describes unethical competition practices that could harm both clients and the integrity of the industry. Question 9. Automobile insurance in Hawaii. What is the purpose of personal injury protection (PIP) coverage within an automobile insurance policy? A. To provide coverage for damage to the insured's vehicle after an accident. B. To cover medical expenses and lost wages for the insured and passengers, regardless of fault. C. To protect against liability claims made by other drivers in an accident. D. To provide reimbursement for repairs to another driver's vehicle after an accident. Answer B. To cover medical expenses and lost wages for the insured and passengers, regardless of fault. Explanation. Personal injury protection (PIP) is a mandatory component of automobile insurance in Hawaii, designed to provide coverage for medical expenses, rehabilitation costs, and lost wages resulting from injuries sustained in an automobile accident, regardless of who was at fault. This ensures that injured parties receive timely medical care and financial support. Option A pertains to physical damage coverage, while Option C refers to liability insurance, which is not the focus of PIP. Option D is related to property damage liability, not personal injury protection. Question 10. Workers' compensation insurance. What is the primary purpose of workers' compensation insurance in Hawaii? A. To provide disability income for employees injured at work regardless of fault. B. To cover the medical expenses of employees only if the employer is found negligent. C. To provide coverage for employees to sue their employers for workplace injuries. D. To ensure that employers can recover lost income due to employee injuries. Answer A. To provide disability income for employees injured at work, regardless of fault. Explanation. The primary purpose of workers' compensation insurance is to provide financial support and medical benefits to employees who suffer work-related injuries or illnesses, regardless of fault. This insurance ensures that employees receive prompt medical treatment and wage replacement while protecting employers from lawsuits related to workplace injuries. Option B is incorrect because benefits are provided regardless of negligence. Option C misrepresents the nature of workers' compensation, which typically prevents employees from suing employers. Option D incorrectly emphasizes recovery of lost income rather than support for the injured worker. Question 11. Liability insurance. Which of the following statements is true regarding commercial general liability (CGL) insurance? A. CGL insurance covers only bodily injury claims arising from business operations. B. CGL insurance includes coverage for both bodily injury and property damage claims. C. CGL insurance does not cover advertising injury claims. D. CGL insurance requires the insured to prove that they were not at fault to receive benefits. Answer. B. CGL insurance includes coverage for both bodily injury and property damage claims. Explanation. Commercial general liability (CGL) insurance is designed to protect businesses from claims involving bodily injury, property damage, and personal or advertising injury. It covers a broad range of potential liabilities that a business might face during its operations. Option A is too narrow as it overlooks property damage coverage. Option C is false because CGL policies typically include coverage for advertising injuries. Option D is misleading. CGL does not require proof of non-fault in most situations to provide coverage. Question 12. Ethics in insurance. An insurance agent receives a bonus for selling a specific insurance product. What should the agent do to uphold ethical standards? A. Promote the product vigorously, regardless of whether it fits the client's needs. B. Disclose the bonus to clients before recommending the product. C. Avoid mentioning the product to clients to maintain impartiality. D. Only sell the product to clients who have expressed interest. Answer. B. Disclose the bonus to clients before recommending the product. Explanation. To maintain ethical standards, insurance agents must act transparently and in the best interest of their clients. Disclosing any financial incentives or bonuses for recommending certain products allows clients to make informed decisions about their insurance options. Option is unethical as it prioritizes the agent's financial gain over the client's needs. Option C does not uphold the principle of transparency. Option D, while cautious, does not sufficiently address the need for disclosure. Question 13. Claims handling and adjustments. What is the primary purpose of conducting a claims investigation? A. To determine the appropriate coverage limit for the claim. B. To assess the validity of the claim and verify the extent of damages. C. To find reasons to deny the claim outright. D. To communicate the outcome of the claim to the insured. Answer. B. To assess the validity of the claim and verify the extent of damages. Explanation. The primary purpose of a claims investigation is to evaluate whether the claim is valid based on the terms of the insurance policy and to determine the extent of damages to establish the amount of compensation owed to the claimant. Option is incorrect. Coverage limits are usually predetermined in the policy. Option C reflects an unethical practice. Option D is a part of the process but not the primary purpose of an investigation. Question 14. Automobile insurance. In Hawaii, which of the following is NOT required under the state no-fault insurance system? A. Liability insurance for bodily injury to other drivers. B. Personal injury protection (PIP) coverage for medical expenses. C. Collision coverage for damage to the insured vehicle. D. Underinsured motorist coverage. Answer: C. Collision coverage for damage to the insured vehicle. Explanation: under Hawaii's no-fault insurance system, drivers are required to carry personal injury protection (PIP) coverage and liability insurance for bodily injury to others. Collision coverage, which pays for damage to the insured vehicle regardless of fault, is optional and not mandated by state law. Option D, underinsured motorist coverage, is also optional, unlike PIP and liability insurance. Question 15. Risk management. Which of the following best describes the risk retention strategy? A. Implementing safety measures to prevent accidents from occurring. B. Transferring the risk to another party through insurance. C. Accepting the potential financial losses associated with certain risks. D. Avoiding specific activities to eliminate risk exposure. Answer: C. Accepting the potential financial losses associated with certain risks. Explanation: risk retention involves recognizing the existence of certain risks and choosing to absorb the financial consequences if those risks materialize. This strategy is often employed for risks that are deemed manageable or for which the cost of insurance exceeds the potential loss. Option A describes risk reduction, while option B refers to risk transfer. Option D is indicative of risk avoidance. Question 16. Specific types of casualty insurance. Which of the following statements regarding cyber liability insurance is accurate? A. Cyber liability insurance covers physical damage to hardware only. B. Cyber liability insurance is intended for businesses with no online presence. C. Cyber liability insurance helps cover the costs associated with data breaches and cyber attacks. D. Cyber liability insurance is mandatory for all businesses in Hawaii. Answer: C. Cyber liability insurance helps cover the costs associated with data breaches and cyber attacks. Explanation: cyber liability insurance is designed to protect businesses from financial losses resulting from data breaches, cyber attacks, and other digital risks. This insurance can cover costs such as legal fees, notification costs, and credit monitoring services for affected individuals. Option is incorrect because it also includes coverage for liability arising from data breaches. Option B is misleading, as businesses with an online presence are more likely to need this coverage. Option D is incorrect. While it's highly recommended, it is not mandatory for all businesses. Question 17. Hawaii Insurance Regulations. Which entity oversees the regulation of insurance companies in Hawaii? A. The Federal Insurance Regulatory Authority. B. The Hawaii Department of Commerce and Consumer Affairs (DCA). C. The National Association of Insurance Commissioners (NAIC). D. The Hawaii Insurance Consumer Protection Agency. Answer: B. The Hawaii Department of Commerce and Consumer Affairs (DCA). Explanation: the Hawaii Department of Commerce and Consumer Affairs (ECA) is the state agency responsible for regulating insurance companies, ensuring compliance with Hawaii's insurance laws, and protecting consumers. Option is incorrect as it does not exist. Option C is a national organization that helps coordinate state insurance regulation but does not oversee it. Option D is a fictional entity. The DCCA is the correct governing body. Question 18. Liability insurance. In the context of professional liability insurance, what is the primary coverage focus? A. Coverage for property damage caused by professional services. B. Protection against personal injury claims arising from negligence in professional duties. C. Coverage for business interruption losses. D. Liability for damages caused by employees while performing their jobs. Answer: B. Protection against personal injury claims arising from negligence in professional duties. Explanation: professional liability insurance, often referred to as errors and omissions insurance, primarily protects professionals from claims of negligence, malpractice, or failure to perform professional duties. This insurance is crucial for professionals like doctors, lawyers, and accountants, as it covers claims related to personal injuries due to professional services. Option is misleading as it pertains more to general liability insurance. Option C refers to business income coverage. Option D relates to employer's liability rather than professional liability. Question 19. Insurance contracts. Which of the following clauses would typically exclude coverage in an insurance policy? A. A clause stating the insurer is liable for covered risks unless specifically excluded. B. A clause that specifies exclusions for intentional acts of the insured. C. A clause indicating coverage for damages due to negligence. D. A clause detailing the limits of coverage provided by the insurer. Answer: B. A clause that specifies exclusions for intentional acts of the insured. Explanation: exclusion clauses in insurance policies are used to delineate specific situations or risks that are not covered by the policy. Intentional acts of the insured are typically excluded because insurance is designed to cover accidental losses, not those caused by deliberate actions. Option that describes a typical coverage clause. Option C suggests coverage for negligence, which is generally included. Option D refers to coverage limits, not exclusions. Question 20. Practical applications and case studies. Mr. Tanaka, a business owner, has been sued for a slip and fall incident that occurred on his property. Which type of insurance should he rely on to defend against this claim? A. Professional liability insurance. B. General liability insurance. C. Workers' compensation insurance. D. Property insurance. Answer: B. General liability insurance. Explanation: general liability insurance is designed to protect business owners from claims of bodily injury and property damage that occur on their premises or as a result of their business operations. In this case, Mr. Tanaka would rely on his general liability insurance to cover the legal costs and any potential settlements or judgments resulting from the slip and fall incident. This type of insurance specifically addresses claims made by third parties for injuries sustained on the business owner's property. Option was a professional liability insurance, typically covers claims arising from professional services and does not apply in this scenario since the claim is related to a physical injury on the premises, not a professional error or negligence. Option C, workers' compensation insurance, provides coverage for employees who are injured on the job, but it would not apply to claims made by customers or visitors. Option D, property insurance, covers damage to the business's physical assets but does not protect against liability claims for injuries to others. Question 21. Health insurance in Hawaii. What is the purpose of the Prepaid Health Care Act? A. To provide free health care to all residents of Hawaii. B. To ensure that employers provide health insurance to their employees. C. To regulate the prices of health insurance premiums. D. To offer a single-payer health insurance system to all residents. Answer: B. To ensure that employers provide health insurance to their employees. Explanation: the Prepaid Health Care Act in Hawaii mandates that employers provide health insurance to employees who work more than 20 hours a week. This law was enacted to improve access to health care and ensure that employees have coverage through their employers. Option is incorrect, as it does not provide free health care. Option C misrepresents the Act's function, and Option D describes a system that does not exist in Hawaii. Question 22. Homeowners insurance. What does a standard homeowners insurance policy typically not cover? A. Damage from fire or lightning. B. Theft of personal property. C. Flood damage to the property. D. Liability for injuries that occur on the property. Answer: C. Flood damage to the property. Explanation: standard homeowners insurance policies generally cover damage from fire, theft, and liability, but do not include coverage for flood damage. Homeowners in flood-prone areas are typically advised to purchase separate flood insurance policies to protect against these specific risks. Options A, B, and D are commonly covered under most homeowners insurance policies. Question 23. Insurance underwriting. What is the primary role of an insurance underwriter? A. To assess and decide on the risk of insuring clients. B. To sell insurance policies directly to consumers. C. To handle claims processing and settlements. D. To provide customer service and support. Answer: A. To assess and decide on the risk of insuring clients. Explanation: insurance underwriters evaluate risks and determine whether to accept or reject applications for insurance coverage. They analyze information provided by applicants and use various criteria to assess the potential risk associated with insuring a client. Option B refers to sales agents, while Option C pertains to claims adjusters. Option D describes a role focused on customer interactions rather than risk assessment. Question 24. Property insurance. Which of the following would be considered a named peril under a property insurance policy? A. Theft of personal belongings. B. Sudden and accidental water damage. C. Loss of income due to a covered loss. D. Damage caused by fire. Answer: D. Damage caused by fire. Explanation: Named peril policies specify particular risks covered by the insurance. Fire is a commonly included named peril in property insurance policies. Options A and B could be covered depending on the policy, but they are not universally named perils. Option C relates to business interruption insurance rather than property insurance. Question 25. Insurance fraud. What is insurance fraud? A. A legitimate claim that is denied by an insurer. B. The act of intentionally deceiving an insurer to receive benefits. C. A misunderstanding between an insured and an insurer about policy coverage. D. Reporting an accident to an insurance company. Answer. B. The act of intentionally deceiving an insurer to receive benefits. Explanation. Insurance fraud involves making false statements or omitting important information to obtain undeserved benefits from an insurance policy. This could include exaggerating claims, staging accidents, or falsifying information. Options A, C, and D do not accurately represent the definition of insurance fraud. Question 26. Types of insurance policies. Which of the following insurance policies provides coverage for a specific period of time and is generally less expensive than whole life insurance? A. Universal life insurance. B. Whole life insurance. C. Term life insurance. D. Variable life insurance. Answer. C. Term life insurance. Explanation. Term life insurance provides coverage for a specified period, e.g. 10, 20, or 30 years, and is typically less expensive than whole life insurance, which covers the insured for their entire life and often includes a cash value component. Options A, B, and D all refer to permanent life insurance products that usually have higher premiums and complex structures. Question 27. Homeowners insurance. What is the primary purpose of liability coverage in a homeowner's insurance policy? A. To protect the homeowner's property against loss or damage. B. To cover legal expenses for claims made against the homeowner. C. To provide financial assistance for home repairs after a covered loss. D. To cover the replacement cost of personal belongings. Answer. B. To cover legal expenses for claims made against the homeowner. Explanation. Liability coverage in a homeowner's insurance policy is designed to protect the homeowner from financial loss due to legal claims made against them for bodily injury or property damage that occurs on their property or as a result of their actions. Option A pertains to property protection, while option C refers to property damage coverage. Option D specifically addresses personal property coverage. Question 28. Risk assessment. What is the primary goal of risk assessment in the insurance industry? A. To increase the number of insurance policies sold. B. To identify potential hazards and evaluate their impact. C. To determine the premiums for all insurance products. D. To simplify the claims process for policyholders. Answer. B. To identify potential hazards and evaluate their impact. Explanation. The primary goal of risk assessment in insurance is to identify and analyze potential risks that could lead to financial loss. This evaluation helps insurers determine appropriate coverage, set premiums, and establish underwriting guidelines. Option A focuses on sales, while option C relates to pricing rather than assessment. Option D pertains to claims management. Question 29. Auto insurance coverage. Which type of auto insurance coverage is typically required by law in Hawaii? A. Collision coverage. B. Liability coverage. C. Comprehensive coverage. D. Uninsured motorist coverage. Answer. B. Liability coverage. Explanation. In Hawaii, drivers are required by law to carry liability coverage, which provides protection against claims for bodily injury and property damage to others in the event of an accident. Collision and comprehensive coverage are optional, while uninsured motorist coverage is recommended but not mandatory. Question 30. Insurance policy terms. What does the term deductible refer to in an insurance policy? A. The total amount of insurance coverage provided by the policy. B. The out-of-pocket expense the insured must pay before coverage kicks in. C. The interest rate applied to the cash value of a life insurance policy. D. The amount the insurer pays for a claim after it has been approved. Answer. B. The out-of-pocket expense the insured must pay before coverage kicks in. Explanation. A deductible is the amount the insured is required to pay out of pocket before the insurance company begins to cover the costs of a claim. It serves as a way to share risk between the insurer and the insured. Option A refers to coverage limits, while option C pertains to life insurance specifics. Option D describes the claims process but does not define a deductible.